Hey everyone, John here from School of Trade. Today we're going to be taking a look at a buy trap short here on crude oil. So we just got triggered into the trade here. Let me get my stops and targets figured out. Now the entry point in this situation is going to be at 45.58. I'm looking for a break down off of this point further down. Now you'll notice right off the bat the risk is very small in this trade. We're only risking 8 ticks. So I want to make sure to go for a reasonable profit target, right? We know that our risk is low, so we can definitely get away with a little bit of a larger target, and we have support down at 45.34, so that is going to be my first objective area. Now I'm going to go ahead of that a little bit and take 2 off at 37. Now we did go into this move with a huge spike higher, and what I'm looking for is for the buyers to give up and cause a drop back down to where this spike really started, down here at around 45.10s or so. So if we can get that drive lower, that's what I'm looking for the final objective, just back down to those lows again, knowing that if they do give up, we should get a relatively extended drive down. Now, we are entering into this a little bit early, but the big reason I like entering here is actually twofold, threefold, fourfold, etc. We have a nice wedge forming here, and we're cycling off the highs. That's a very nice place to be when you're looking to get into a trade. More importantly, though, after that huge move up, we had the nice pullback, big move up to the highs, and then the buyers just disappeared. They came back, they double topped. When they try to come back up, their follow through is a doji. They just keep getting weaker and weaker and weaker, but the bears, they're still maintaining this heavy bear strength up here. So if they're given a chance, they're very likely going to get this to break down. Now, we just had a strong buy move off of the lows of the wedge, and the wedge at the time wasn't honestly there, right? So when they come back to those lows right here, now you can draw the wedge lows up, and they get a strong secondary bounce there, which is where a lot of buyers are going to get in. And they are immediately shut down. Very strong bear candle that followed it up, essentially telling them, hey, you screwed up, right? You got into the wrong place and you're probably going to have to exit. And their exit point is going to be right underneath that secondary bear candle. If they're stubborn, their stops will be underneath the low, or maybe this low, or maybe even this low back here. So we have a lot of stop run potential down here that could cause a nice spike lower into our targets. So very interesting situation that we find the buyers in, a little bit precarious, right? They kind of feel like they're looking off the edge of a cliff here. And if we can get a breakdown, we should be able to see that drive farther. Now, the reason I'm looking for the bigger target again is because with such a huge drive up, if the buyers are unable to sustain this upside momentum, they're likely going to give up and they'll take it all back, all the way back down to those lows. And that low is made at 45.12. So we'll go ahead of it a little bit, in our final targets at 45.15. So everything coming together really well. Now we just need to see the sellers step up, see the buyers get out of their positions on a potential stop run, and we should be able to get that drive down into our profit targets. Seeing the sellers, yep, there we go, we get the target filled. Seeing the sellers coming in, maintaining their overall strength, and we get that first target. Now, I did move the stop down a little bit, just given how strong of a breakout that was. That forms somewhat of a line in the sand. We know that a lot of buyers are going to have their stops underneath the low. We need to stay underneath that low. That big breakout candle did close underneath it, but now we have to see them follow up, and that's exactly what they're doing. So because we have our target taken off, we can go now down to break even. And honestly, with this breakdown, a lot of times when you get this strong of a drop lower, you can just trail along with the candles, but you do tend to give back some situations where it'll come back, just tap you out, and then fall right into your target. So I'm going to leave my stop at break even +1 for a little bit here until we get some more information, but overall looking pretty good off to the downside here, looking for that 45.15 next up. We're seeing the buyers getting trapped in again, so I'm actually going to add one more to this, 45.21, to go back up to 2 contracts here for the downside. I'm going to leave my one stop back here, and the other stop I'm going to leave right up at the highs here. Now, we just got that final one taken off from the earlier position. Now I'm looking for a decent drive through. This is going to be the last straw for a lot of buyers. So essentially what I'm doing here is I'm leaving an open target, and I'm waiting until this candle closes. That's going to be where I look to exit the trade. And the main reason behind that is a lot of times when you get buyers trapped, and then you get more buyers trapped, and then you get more buyers trapped, and then more and more and more, eventually they all give up. And a lot of times that happens in these big areas down here, like this major swing low, where you just see them get exhausted and say, fine, you know what? I'm out of the trade. And they slam the market lower and you get this monstrous bull bear candle depending on the situation. So I'm going to wait until this candle closes, and that's going to be my exit strategy for this one. Now, you definitely can look to trail a little bit further down. This is a huge breakdown move, and I really don't want to see any of this come back. So I'm going to lock the stop nice and tight now that I know that we are in the right breakdown. Now we just need to see them follow it up. So the final portion that we're going to be taking off, again, is just based off the fact of once this candle closes, that's the breakdown that we're looking for. It doesn't mean that the move is done. It could easily fall another 60, 70, 80 candles before you finally see the end of the downside move. But this, generally speaking, will have a big bear candle, and then you'll start seeing all the sellers who have been sold all the way up here start taking profit, and that causes a little bit of consolidation and chop. Really don't want to deal with that. So we'll give this candle another 3.5 minutes or so, and we will close it at the end. All right, got 9 seconds left on the candle here. We're going to close the stop because that part's really not going to matter. We're just going to be exiting at the current market price, wherever that happens to be, right there. And there's the exit point. So we get out of the trade. Beautiful breakdown. That's exactly what we were looking for. Beautiful little add-on to it as well. We have the wedge breakout, huge bearish follow through, and now we're seeing the bears continue to slap these buyers, and the ones who did stick around to try to defend, they just gave up right there. So this could spark a huge downside move. This could just spark this big bear candle and then an immediate bounce right back up. Either way, though, peg this thing to a T, and that's going to do it for me. Not meaning to rhyme there. A little bit of Dr. Seuss for you. So that's going to do it for me. If you have any questions about it, feel free to send an email to School of Trade. Don't forget to check out our trial at schooloftrade.com. And as always, we'll catch you next time.